Welcome to Tip TV TradingView. I'm joined by technical analyst Zach Mir. Zach, morning to you.
Morning.
Let's kick off with the first slide, if we may. Cable, Great British Pound against the US dollar. The slide here is suggesting basically some waves higher up to an eventual target of 126.84. Would you agree with that?
Well, there's a lot of homework there on that chart from Signal Swiss. You could, I suppose, it could be argued this is just a market in a range, and the best thing to do is just trade that range between 123.50, 125.50, something like that. I see all this trendy butterfly stuff and the inverted head and shoulders as well. It looks as though, I mean, overall, sterling is in a strong state or a stronger state than most currencies at the moment against the dollar. And you'd be going for a move to the top of the range anyway, even without all this analysis.
Right, understood. Okay, so let's move on to the second slide. Gold. We know that this is a very crowded trade by retail investors.
Yes, I mean, unbelievable. I mean, they were long ahead of the Trump result, which paid off for them because they had that. It was a surprise. So you had the spike to 13.37, something like that. Since then, though, they've been buying the dip, and every $50 down, it's got another $50. So we've now broken key $1,200 support. You know, I think this is one of those markets that, even though this analysis here from Bamboo Growth might work, that you've got a move higher from the current move. Let's say it becomes an inverted head and shoulders type reversal.
But are the technicals going to lead the fundamentals here? Because everyone's saying, you know, we should be buying gold. It's, you know, basically a risk-off strategy. You know, it's obviously an inverse relationship of the dollar, but it keeps going lower, doesn't it?
Well, the thing is how much the dollar is absolutely rampant, and that's just killing everything else, including gold. I'd rather be late on a move higher than try to
pick a bottom.
Pick a bottom here. So that's really what I'm saying. I mean, we could go back to below 1100. There's nothing on the chart between basically 1100 and 1200. So that on that basis, yeah, the arrow to upside might work there, but it could come in at 1080 or the 2015 low, which is even lower. So be very careful here. As I said, I'd rather be chasing strength than trying to pick a
bottom. Understood. Let's move on to the third slide. Silver. What are your thoughts here?
Same story here with silver as with gold from FX Pro Trader. You know, got that very vicious looking move to the downside. If you are going to buy or try to catch the falling knife, well, you know, have your orders. What's that? 1550 or so. Have it a bit lower than maybe you expect the market to go. But once again, I'd rather see higher highs and higher lows before taking the plunge. You can see actually. Over the last week, you had the higher highs and higher lows, and you still got slapped down there. So very nasty action there. I think a lot of people caught out, and you know, if you're involved in an angry market, you can get burnt even if you do all the right things. So it's almost the best advice here is just to stand back and wait for the dust to settle.
Understood. Let's wrap up with the last slide. The S&P 500. The rate of ascent incredible in recent sessions. Would you agree with Hussein 9 that this is going higher?
I think it is. I would agree with his scenario that it's going higher. I'm not quite sure whether I would add in the lower part after that. I think the story of the recent past is any pullback that we've seen has been bought very aggressively. And even if it does go down, you'd probably be waiting just to look for points to go long rather than to actually go short, just because you can get whipped so hard. I was looking for 2150 as a possible buy zone, or as Hussein has got here, the 2100 area. But I think the lesson here is just being short doesn't really pay off in this market.
Understood. Zach, thank you very much indeed.